The markets next. The JSE is tracking global stocks, which are trading moderately higher this morning after the long Easter weekend. Local investors will be approaching trade a little more cautiously after a few days of non-activity on the JSE. For more on what's happening in the capital markets, let's talk to Petri Redelinghys, the founder of Herenya Capital. Petri, good morning. The JSE muted over the long Easter weekend. What seems to be driving market activity this morning?
Good morning, and thank you for chatting to me. And as you say, we were closed for the long weekend. We are very privileged to have 4 days off over Easter weekend. A lot of countries don't, so we obviously took full advantage of that and enjoyed the time off. And today, our market playing a little bit of catch-up, right? So it's interesting to see, actually, because we saw yesterday quite a bad performance from international markets. If you look at the US, for example, that was actually negative and is kind of trading slightly lower to where it was, on Thursday at the moment. So it seems as though world markets are somewhat softer. However, the commodities market is doing relatively well. Gold trading at $2,254 a fine ounce, which is sort of record high territory. Yesterday, obviously, that traded as well. And it is up from where it closed yesterday. So we're trading in record territory for gold. And that, of course, is going to be very good for our economy, as we know that South Africa is still, at least our market, is still very, very much a commodities-facing market. So when commodities prices do well, we do well. Brent crude oil price up around 0.2%, gold up around 0.25%. And this is lifting the top 40 index by around 60 basis points or 0.6%. And the rand is getting a bit stronger, so 20 basis points stronger, or 1/5% stronger in the rand, trading at 18 rand 87 to the US dollar at the moment. So it seems as though, events over the weekend, which were of a higher risk nature, there was lots of shenanigans in the Middle East, has put some upward pressure on commodities, and this is, playing into the favor of the market on our side locally.
All right, I was going to ask you specifically about rand and the rand and commodities, but I think you've covered that for us, unless there's something else specifically you want to add to that, Petri.
Nothing really, I guess. I suppose I could add that our house view at the moment is that we are very much long gold as well as oil. So energy and precious metals is kind of our play. We feel that the market is, trading from headline to headline. It's been a very fun game being long some of these big tech stocks over the last couple of years. However, if you look at things like Sasol, for example, trading at a price-to-earnings ratio of 3 versus some of the, Apple or Nvidia trading at price multiples of hundreds, it's starting to make sense to rotate into commodities in a big way for us.
Okay, let's look at this one, it's actually quite interesting. So the U.S. says it wants to increase food imports from Africa by 5.7 billion rand over the next 18 months. What's behind that?
So I think it's an interesting move. We know that the U.S. has the AGOA Act, which is specifically targeted at fostering trade with African countries. And their organization, USAID, which is the U.S. Agency for International Development, has essentially announced that they want to increase imports of food products from Africa into the U.S. By 10%, which results in, as you mentioned, 5.7 billion rands worth of additional food imports. They're particularly looking at things like nuts as well as seafood and a couple of other vegetable sort of products. What's interesting here really is that I think there's a bit of a gold rush happening for Africa. This is something I think we might have spoken about long ago in the past. On the one side, you've got the U.S. going to a country like Zambia, for example, saying, hey, you need to stop cooperating so much with China and side with America. While if you look at someone like Zambia, for example, the airport, the roads, even the very center that they were in, the hospitals that were there, it's all, I don't really want to say gifts from China, but Chinese developed. So the U.S. is finding itself in a position where it always used to be able to almost dictate the terms of what everybody else should do. And particularly in the African continent, what's happening is that through the BRICS partnerships, the African countries are finding a bit more benefit. So the U.S. now has to kind of sweeten the deal and almost coerce us back into their favor, if you will.
Yeah.
So I think it's a bit of an interesting time where Africa is kind of the prettiest girl at the ball, and all the big developed nations are trying to woo us in a way. And look, I mean, at the end of the day, an extra $300 million worth of exports or 5.7 billion rands worth of export over the next year and a half. It's obviously not just South Africa that benefits from that.
Yeah.
But for the continent as a whole, this is fantastic news.
Yeah, there was a lot of discussion, ahead of the renewal of AGOA, would it, wouldn't it, and especially around the conversation for what's in it for Africa. So which imports, which businesses will benefit, what is the real win in terms of the benefits to the African continent and business players here. Probably a conversation we can have in future. I want to go back quickly to the JSE, which is how we started. There's an in-depth report by Business Day, which shows that the JSE has shed 2.3 trillion rand in value since 2022. Does it mean that investors are moving money out of the country? And if that's so, why?
Yeah, this is bad news. I'm sorry. So to go by the numbers, by the end of the 2022 financial year, the market capitalization of the JSE was 21.34 trillion. By the end of the 2023 financial year, that had reduced to 19 trillion. So we lost just over 2 trillion rand in market capitalization. This is through a combination of things, right? There's obviously been some delistings. Companies that are no longer listed on the JSE have privatized or delisted, right? There is also just essentially a bit of a lack of interest of international investors. A couple of things happened. One, some of the Regulation 28 rules changed where, Regulation 28 dictates what a mandatory structure for a retirement portfolio should be, right? And there are certain limits in terms of how much you can take offshore and how much you can have in, high-risk equities and how much you should have in property and that type of stuff. So this is really a regulation designed at protecting the South African consumer or South African investor from being overly concentrated in any one asset class so that they don't have, it reduces risk. That rule was essentially changed to open the gates a little bit to allow a larger portion of South African investors' retirement fundings to be invested offshore. And as you can imagine, the floodgates opened and capital flight took, up to the new maximum took place. This is great for investors, for you and me. Our pension funds are now essentially able to better invest for our future. However, this is bad news for the JSE because there are some, people feel there are better options out there, particularly if you look at the US or European markets, for example, as investment destinations. So there's a combination of factors really that has been driving essentially the capital flight from the JSE. And I mean, if I look at my own time that I've spent in stock markets, which has been almost 2 decades now, if you look at the daily traded volume that the JSE does, when I kind of started in this stockbroking and financial markets business, we were doing somewhere around 36 billion rand a day in trading volume through the JSE. 36 billion, right? Nowadays, if we get to sort of 18 or 20 billion rand, that's like a big day. So there's been a drastic reduction in the volumes traded on the JSE, which has obviously exacerbated this capital flight situation. So it seems as though, and to be very frank, it's essentially just unfriendly policies towards business that South Africa currently has. It's driving capital away from our capital markets. It's driving capital out of our economy, which is, the problem is getting bigger and bigger. We have to do something to stem the tide.
A second conversation that's worth, another half an hour on its own, Petri, just the policy trajectory of the country, because again, in the lead up to questions around the renewal or not of AGOA, those were some of the issues discussed. And you have people on either side of the spectrum saying, well, yes, they are, and they are conducive to, creating a really positive investor environment, and others who might disagree. But let's come back to money that is staying in the country, and property investor Calgro M3 has given an update to the market about this mixed-use development in Marlborough with nearly 30,000 housing units. Tell us more about that.
Yeah, this is going to be quite an exciting project, I think. I think it's going to change the face of the city a little bit. We see these big types of projects happening from time to time. We know that there were some out on the Midrand side of the world. So this one's a bit closer to the center of town, I guess. Marlborough is quite a bit inside the ring road, if you will. So it's going to be an interesting project, right? 30,000 housing units as well as commercial, retail, industrial, as well as medicinal spaces. So there is also going to be healthcare infrastructure. So it's a joint venture between Calgro M3 and a company called Eris Property Group. Between the two of them, they have to kind of split the cost of all the infrastructure development. So there's stormwater drains, there's water, there's roads and electrical infrastructure and all sorts of things that have to go in order to essentially build an entire neighborhood of 30,000 housing, between 20 and 30,000 housing units. I mean, that's a lot of people. If you say that there's an average of, say, 3 people living per household, that's a huge amount of people that requires an enormous amount of infrastructure spend. So one of the things they have to do is obviously build the infrastructure to sustain sewage and water supply and electricity supply for all these people, as well as companies and businesses and commercial spaces and retail spaces that are going to be operating in this sort of mixed-use space. What's interesting here is that they aim to be sort of a green development, right? So they're going to be very environmentally neutral, and they're trying to do a sort of what they're calling sustainable investment, right? So where some of the water infrastructure, for example, isn't necessarily 100% dependent on pumps to clean water and things like that. I'm not 100% sure, obviously, what their plans are, but I do think it's an exciting project. And I think that these are the types of projects that can have a big impact on valuations, not only within the district that they're building, but in the surrounding area. I think it's good for the entire sort of larger neighborhood in which they're doing this. So obviously it's going to take a couple of years, but this is an exciting development, and this is looking to they're estimating that this is going to make them around 18 billion rand in revenues. So I guess we shall see. They're certainly going to be spending billions and billions on this project. So hopefully this works out for them. Although keep in mind, very long-term project.